How's it going, everybody? Happy New Year. Hope your 2025 is off to a great start. It's been a minute since I've made a video. I missed last month's update because I was traveling to see my wife in Thailand, and then we stopped over in Vietnam for a few days. We had a really good time, and if you guys are looking to travel at all in your lifetime, I'd highly recommend taking a trip over to Southeast Asia. My wife is Thai, so I've been over there quite a few times already. Really interesting, so much stuff to do. The food is amazing. But with that said, it's good to be back and continuing to show the update of this portfolio. So if you're new here, I share an update of this investment portfolio every single month, really just to inspire others to start their own investment journey and also give complete transparency into what it's like to actually have a portfolio, because I think there's a lot of people out there that promote investing as day trading, or they think you can get these major returns in a short time frame, which really isn't true, at least 99.9% of the time. And so my approach is really just to invest in fairly safe companies over the long term. So just looking at this portfolio, the value is about $40,690. Total dividends earned since the inception was about $3,500. A market gain of just shy of $13,000, and that puts us at an overall money-weighted return of about 93%. And then performance over the past month has been a little up and down. We started out December doing okay. We actually almost hit a value of $42,000, but then we had a pretty sharp decrease about midway through December, and then up and down. So overall on the month, we were down about 1.5%. And just looking at some of the pies that I have here in this M1 Finance portfolio. So a pie is really just a grouping of individual companies that I put together myself. And as you can see, almost every single pie is in the red for this month. It looks like the biggest hit we had was in the industrial sector. And when I click into here, company like Fastenal down over 13%. So that one hurt a little bit. Genuine Parts Company over 7%. Waste Management 10%. So yeah, this industry took a pretty big hit this month. And then most other pies were down in the 2 to 4% range. But it looks like technology had a pretty good month for the most part. Broadcom performed really well, up over 38%. So that one company pretty much lifted up this entire pie here. And then Tesla, which I don't hold very much of, that was up 16%. So not too much of an impact there just because the weight is lower. But overall, not too bad for technology. And that's why I always stress it's good to have a diversified portfolio. And what that means is have companies that don't move alike. Some days you're going to have holdings that perform poorly. Other days they're going to perform well. And for the most part, they should counteract each other. And your goal in the long run is to have that increase steadily. All right, so let's check out the dividends for this month. So to kick off December, we got $14.02 from Aflac. Then ExxonMobil paid out $3.69. Pharmaceutical company Johnson & Johnson paid out $6.44. Eli Lilly, another healthcare company, $2.40 from them. Microsoft paid out $2.25. And Microsoft is definitely a company that has a lower dividend yield, but tends to grow their share price higher over time. So they kind of got that hockey stick growth going on, or at least they did earlier on in their company. And that's really how most technology companies work, is that they pay a lower dividend yield, but if they perform well, they're able to increase their share price exponentially. And they also aren't really able to pay out a high dividend anyway, just because they have to continuously reinvest their profits back into the company because technology is such a competitive industry and you have to move really fast. But that's what we got from Microsoft. 3M paid $1.85, $4.82 from Home Depot. Next is $6.27 from Realty Income Corp. Now this is actually a monthly paying company, primarily because they're a real estate investment trust, or REIT for short. And that's generally how these types of companies work. They pay their dividend out monthly as opposed to quarterly. Then we have an electrical utility company based on the East East Coast, this is Consolidated Edison. $1.20 is what they paid. McDonald's, of course, everyone knows McDonald's, fast food chain, has a strong global footprint, recognized in almost every single country, except maybe North Korea. But this month, they paid $3.56. Coca-Cola paid out $3.95. Again, pretty boring company with Coca-Cola, McDonald's, and Consolidated Edison. You're not going to see too much crazy growth. These companies are all in industries that are slow and steady, and they've been established for a long time, but many of them have been able to increase their dividend payout year after year. So from a dividend perspective, these companies are usually pretty solid. Next is Stag Industrial. This is another real estate investment trust, but they focus more on industrial properties as opposed to your standard commercial properties, or rather your retail commercial properties. But they paid $2.67. Then Waste Management paid $2.29. BlackRock paid out $7.86. Next, we move into an ETF. This is Vanguard's VYM High Dividend Yielding ETF. They paid $17.24. Then we go into another Vanguard ETF, and this is VTI. So this one follows the entire stock market, essentially. It's a mix of small cap, mid cap, and large cap companies. There's a couple thousand companies in this ETF, and the yield is a little bit lower than VYM. VTI's yield is pretty close to the S&P 500, so it's about 1% or 1.5% or something like that. But they paid about $13.46, and we have another ETF here, and this one pays out monthly. This is from SPHD, and they paid $6.92. Broadcom is next, and you guys saw they had a massive month, up over 38%. They paid out $7.66. Then Brookfield Infrastructure Partners paid out last, and for some reason we get paid out many times. There was even an adjustment here, but it amounts to about $6 and some change. So with that said, our total dividend income from December to close out 2024 was $114.74. And just to show you guys, last month, since I didn't make that update, we received $85.73. So that's going to put our total dividend income for 2024 at $998, just shy of $1,000. I was really hoping to hit that $1,000 mark, but personally, I haven't been able to invest as much into this portfolio as I initially would have liked. Stuff comes up in life that you just have to pay for, and sometimes you just have to shift your attention elsewhere. But we still did get an overall increase from last year, primarily because we reinvested the dividends that we earned back into the portfolio, and the companies that I've invested in have for the most part been able to increase their dividends over the past year. So with those two things, that's what really causes the increase. Now obviously you want to invest as much as you can into your portfolio to compound even more. So if you can do that, more power to you. And one last thing I did want to show you is that I broke these dividends out into different time frames just to show what you would be earning, say if you worked a 40-hour work week, or what you would be earning every day. So I take the last 3 months and then break it down that way. But so far, our yearly wage would be about $940. Every week we would be making $18, and daily that equates to about $2.58. And again, this is from doing absolutely nothing, completely passive income. And I totally agree, it may not seem like a lot, but everybody has to get started somewhere. So wherever you are in your investment journey, if you haven't started yet or you're really far along, just stick to principles that work well for you and you'll be on your way to financial freedom. Thank you all so much for taking time out of your day to watch this video. I appreciate each and every single one of you. Give 2025 hell, and I'll catch you guys in the next one.